What's happening? Ryan Adams, Adams Group at Real. We are here in Sienna. Finally, by the way, if you have not come to our office and driven by and seen it, we just had our grand opening. Let me show you a 10-second video just to show you what our grand opening looked like. Man, if you missed it, sorry we missed you, but feel free. Come by, have a drink, have a coffee, say hi. We'd love to meet you. We're right here in the front. If you want to see someone face to face, have a conversation with, that's what we're here for, to serve you here in the Houston area and beyond. Hey, for the last week, I've had 3 different clients come up to me and ask me the exact same question, which was, hey Ryan, is the Houston market crashing? Should I wait? One was selling, one was buying, the other was selling. Well, I get it. You're scrolling through social media, you're looking at all the different news articles, and maybe some of those are scaring you to mess. I'm here to set the record straight and let you know what's actually happening. This real estate market update for October 2025. We're going to look at the numbers that closed out for September 2025 compared to what they were last year, September 24, on this episode of Ryan and Real Estate. As always, I do this market real estate update for you just so you can understand what's going on in the market here in Houston. And I'm going to jump right into it so you can know those numbers. Yes, the market is not crashing, but let me tell you some interesting data that you'll find from this. So what I always do is I pull the data every month and I look at September 2025 compared to the year before. I'm literally just pulling the numbers out. I compare them and then I want to go deeper. I want to look at the national context, look at the local context, and jump into it. So let's jump right into it. So first thing is we look at is inventory. How many available homes? In Houston right now, there's 16,945. That's up 21% from where it was last year. And you might find some real estate agents that's putting that as a bad thing. Inventory, guys, hitting the market is a great thing. That's going to help balance out the market. If you remember back in 2021, there was hardly any inventory and therefore the prices went through the roof. People were overpaying, waiving appraisals, no matter how, just to do anything good to get a house. This is helping those buyers out and really helping balance the market out. For the last 3, 4, 5 years, we have been in a seller's market where seller could pretty much have control of it. Now we're seeing a little bit more balance by having a little bit more increase in the inventory. The next stat we really look at is how long does it take to sell? In the Houston market right now, it's 45 days. That's up 7% of where it was last year. Not too bad. And the reality is, when we look at that, that's not really slow. That's pretty normal. That's just 6.5 weeks. In 2010, this was sometimes 120 days. So just to put it in perspective, I mean, it's actually a really fast time to sell a house. Next, we look at the average sales price. Average sales price in Houston from last year. This is the big number. Everybody thinks if the market's crashing, this would be a great sign for you to see it. And the average sales price right now is $447,873. That's up 1%. It's up, it's not down, it's up. And that means, and I'm gonna show you some more information on that so you can look at to see how much more up will it go, or will it actually go down as per se what a crash would be. And then the final stat we always want to look at is how many homes sold. In Houston last month, that was 3,359. That's up 1% from last year. That means there's more transactions that are happening year over year. More people are deciding to make that decision, getting loans, going through that whole economic cycle that helps keep our market healthy here in Houston. And there are lots of other markets where homes are sitting for 9, 12 months. Prices are dropping, but here in Houston, we've got a very stable market. Now, if we want to look from a national perspective, here's some things that you might want to take a look. I brought some slides around with me this time, bring some little more education for you to see of what's actually happening. Fannie Mae's latest home price expectations index, and if you don't know what Fannie Mae is, they're the largest backer of mortgages in America. They literally have PhDs, economists, massive data teams, and billions of dollars that they're spending on the line, so they need to make sure they're getting their forecast right. A lot on the line here. They back all these loans, so they want to make sure they get the prices right. And as you can see from their panel, the highest was 27.4% increase in home prices. The lowest was 6.7%, but the average was 17.6% increase in home prices by 2029. So if you just looked at that from that standpoint, that means the home that you would be buying now for about $448,000 is going to put you much above $500,000 given the next 40 years. And if you were to go with their most optimistic part of their panel, that would put your home at $570,000 here in the next 4 years. So what does it tell us? It tells us that the smartest real estate analysts in the country with the most sophisticated models and the most money on the line are saying home prices are going up. So to answer that question, are we about to have a crash? Absolutely not. Now, a war may break out, something crazy might happen, but from what's the given knowledge that we have right now, home prices are going to continue to go up. Now, you might be going, Ryan, I still don't know. Well, let's look at the historical data. Historical data would show you that in the last 40 years of data, there's only been 6 times in which home prices have taken a dip. And we're not just talking about 6 random periods. We're talking about recessions, booms, financial crisis, pandemics. We all went through that. Through all of that, there's only been 6 times that has happened. The first was a post-inflation recession recovery, and that was in 1982. We had the mild recession in the 90s, early 90s. We had the dot-com crash in 9/11. That was 01 to 2003. And then we had the 08 to 2012. That was the great financial crisis. They were making very bad loans, which we're not doing today. Today, our loans are some of the most credible, legitimate loans that has ever been. If you look at a credibility legitimacy score, they are the highest they have been in the history of loans at this point. And then the 5th period was the COVID pandemic, and the rates dropped during that time. So those 6 times were all the times we saw a little bit of dip, and we did see the interest rates come down. But when interest rates come down, home prices go up. And right now, we saw the peak of interest rates in the last year to 2 years, and we are slowly seeing them start to come down. Now, some of you are hoping they're coming down way quicker than they are, but they are working their way down, which means we are going to see those prices go up. And how that helps you and how it helps everyone is, as a seller, prices going up means you're gonna be able to sell your home for more. As a buyer, it means as interest rates go down, you're gonna have more affordability. And that's why I said, and you see this Instagram video I just did this week, I believe we are in the most perfect window we could be in as a buyer for you to purchase a home, because there's not such a huge surge of demand coming into the market to make the prices go up yet. Interest rates are still a little higher, but it allows you to get a home at a great price, and then eventually you can refinance. That's fine, but you got this price locked in at a lower rate. Think about it right now. If you could predict that 40 years from now, the home that you have would go up to 27%, as we saw some of the analysts say before, would you want to buy during that point? Absolutely. And most likely, interest rates are going to go down. That means you could refinance and get that even at a lower rate, which would help out your monthly payment and your affordability. So 50 years of home pricing in America. Look at that green line, the relentless march upward from the 1970s to today. Now see the red arrows, those are the price dips. Actually decline in home values. Count them with me, 1, 2, 3, 4, 5, 6. So 6 dips only in 5 years. But look how short they are. They aren't years-long crashes. These are like 6 to 12 months corrections, and every single one of them is followed by new highs in pricing. Even the 2008, which was the worst crash in modern history, looks like a little blip when you zoom out across the 50 years. This is why, guys, the wealthiest people in America hold significant real estate. I know it's not exciting. It doesn't give you the rush of doubling a stock or hitting it big on blackjack hand, but this is what's reliable, it's steady, and it's eventually going to compound. So based on all this information, what should you do? If you're a seller, if you're planning on making a sale, maybe you want to wait a couple of years when prices continue to get a little bit higher. But if you're actually thinking about making a move, if the buy that you're going to do after you sell your home is probably more expensive than the home that you're buying now, you probably want to go ahead and sell now and put that expensive purchase at a low price so that it can inflate over the next few years. If you're a buyer and you're thinking, oh, the next 3-4 years I want to buy, man, there could not be a better time for you. Every lender I talk to, every person who really understands this industry and is an expert in it knows this is such a great time to buy. Look, lots of information, lots of data. Hope this is helpful for you. If you have any questions, if you don't agree with me, totally cool. I would love to hear your perspective. Take a minute, drop a DM, let me know the questions you have about the market, or drop some comments in here. Let me know what you think. Let me know questions you have, and I'll do my best to answer them. As always, I'm here to provide you the best data possible, and from what I can see, again, looking at September to last September, we're continuing to have a very balanced market. Transactions are up, home prices are up, interest rates are going down. It looks great for right now. Otherwise, we'll see you next month on Ryan and Real Estate, and have a great week.